out from Zogi Labs, so I'll
Oh,
put that
cool.
one out too.
Okay.
Oh, hey everybody.
What's up, Joe?
Just busy, busy, busy. You know,
Busy,
I
busy,
mean,
busy.
trying to make sense of everything that's going on.
Yeah, yeah, yeah.
In a sense, it's very complicated, obviously.
Yes.
So covering a lot of press on that. I'm looking obviously a lot at the macro stuff and how that flows into crypto, but I'm also looking at a lot of cool new crypto stuff. New games I'm finding from friends that send me every day. Going to share one later on.
Cool.
With a referral code, for the beta, if you want to check it out,
Nice.
and stuff you find. So I see tons of excitement, and I see, I kind of see obviously some kind of doldrums like activity in crypto right now, but it's also the end of August. It's before Labor Day. I mean, for the non-US viewers or listeners, the August pretty much, particularly the second half, pretty much shuts down in the US.
Yeah.
Because everybody who's doing anything is taking their kids on vacation. Everything's getting done before school starts.
Yep.
A lot of schools now don't wait till Labor Day to start. They start on the 15th of August, but a lot still do Labor Day. So nothing's going on. But still, if you dig in and you get all, we have a lot of people that send us stuff, you find cool stuff out there. So
absolutely.
That's why I'm so I won't say so optimistic, but I just feel like we're in a good space, and we just need to get, really see that institutional buying pick up in BTC and ETH once Labor Day hits, because that'll bring retail back in, I think.
You know what? That's a really, I had some really bad, not really bad, but some sad news hit my feed today. Ramon Recuro, who built Babylon, was on. I interviewed him for Mission DeFi, and Babylon is like virtual social investment clubs, and it was beautifully built. Ramon and his team are brilliant, but because of the Ferrari exploit, they basically were taken out and had to shut down the protocol. So, I sent him a note and said, hey, I'm really sorry to hear this. I'm sure there's some great lessons learned here. And when you're ready, love to have you back on the show. But he's just one of those kind of conscientious, responsible people that built a really cool platform. And here's the crazy thing, right? You've got this amazing platform, and he actually invites people to fork it because it's a really powerful platform. He invites people to fork it, but it sucks because you're in this position of, you have this amazing tech, you've worked hard on it, it's audited, it's checked, he's got the legal stuff dealt with, everything. And you build this whole thing, and this is kind of our internet connectivity, our interconnectivity issue in DeFi, right? Because they had so many pools that were utilizing Rari lending, and that exploit took out a ton of the cash that their members had in those protocols through these investment groups that you could build in Babylon. It took down the whole thing. And so their price plummeted in the bear market. They couldn't raise money. He admits, he said he didn't raise enough money. He goes, this is a really great thread for anybody starting a project here in the space. This is an awesome thread of things to think about. He said they didn't raise enough money. He said that they did a raise in, I guess, January but they only raised $3 million because they raised it through sales of NFTs. And he said one of the things he realized was there's not a lot of crossover between the NFT people and the DeFi people, and he should have raised it normally. And then they had to scramble. They had a devaluation. The whole thing was just kind of this cascading series of events. But it must be so frustrating to have kind of all these financial underpinnings cause you to shut down when you've got this incredible piece of technology and a powerful platform, So I think there's a real opportunity for somebody to take this platform and start over, because if you start in a bear market, the expectations for you are you've built the system, you don't have to rebuild it, and you've got the opportunity as the market comes back up to grow something. And I'm sure it must be frustrating for that team to have done this. They've went without pay for the last 4 or 5 months. And So
Shut
anyway,
it down. Shut it down. It's
yeah,
not, you can't, it's too big of a hole to dig out of now. And it's not his
yeah,
fault. He's a good guy. Rejigger, retool, come out with something new, pull all your investors into the new deal to make them whole somewhat, give them something,
yep,
and get on to the next thing. You're a good dude. And, don't let this just knock you off your game completely. Keep going, man.
yeah, yeah. And look, they did all the right things. They took their tokens that they had left and cashed them out, and they're giving it to investors that lost money in the pools that they had. They are going to take any compensation that comes from Rari and pay back every wallet that lost as well. So I mean, he's just, if you want to go back, anybody, and kind of just find out what a real founder is like, this is one of those guys. If you listen to my interview with him, you can hear how he really has been incredibly thoughtful about how he built this platform. So next thing he does, I'm definitely want to get into, because he's just, top-notch guy, former Google dev and, startup tech world guy. But, shit happens, but it's a bummer to see the good guys lose out. So,
yeah, but when in this world of DeFi and inter-exchanging between protocols and these dependencies that are created, I mean, it just tells me we need a whole new level of due diligence in the strategic partnership area. Like, if you're running a protocol, you really got to dig in on this better, because I'm not talking about Ramon. I'm talking about just generically. Lesson learned, okay, from all of this is that, you really, when you do these kind of composable protocol type interdependencies, I mean, you really are putting your enterprise at risk.
Well, and here's the thing, right? I think he would probably admit that dependency on one lending protocol was a mistake, right?
Well, yeah,
that
but it's
exactly what you're saying, right? Spread
Yeah.
this out, put them on 10 lending protocols, right? The 10 that you think are strong and look audited and have good. That way, you're not completely taken down by one exploit, right? You've got one problem to solve, one small group of people to pay back, and spread it out. And I agree with you. I mean,
I'm not picking on him, though. Yeah, I'm not.
Of course not. No, of course not. No, this is normal. Look, and it's hard because integrating these other protocols is hard work, and so you only have so many devs to do so much, right? And that makes it even more difficult.
Well,
to manage.
I think it's also hard for. Look, I'm going to pull out the experiential hat a little bit right now, and I'm going to look at Ramon. And I'm going to say,
tell me, Uncle Joe.
Former hotshot Google software developer. Sounds to me like this guy's been incredibly successful at everything he's done.
Yeah.
So far, and he hits this thing. It goes under for a variety of reasons. A lot of them macro-y, force majeure type reasons that are sort of beyond his control. And he's going to be reeling. But take it from someone who's seen deals fall apart. Let's just say shitloads of times. I mean, at the closing table, watching billions evaporate because some dude's got a stick up his ass and blows it all up. I mean, it's just horrible shit happens continuously in business, and failures happen. I don't want to say horrible shit, but failures happen. And for someone who's as successful as this guy is, just follow it away as a lesson, like I said, and get going again. I mean, I remember when I was in grad school, we had the guy in Fred Bureau, who was the founder of MLS, the multi-listing service. And actually, when he started, he had been fired and had no money, and just came up with the idea and launched it. And he said that this is like 90s data, 1990s, but that the average entrepreneur fails evidently like 13 times before hitting the big success. So the key is, if you're in this game, you're in it forever. Yeah. And you just keep picking yourself up, and you keep going, you keep picking yourself up, and you keep going, and you trust that eventually you're going to succeed. Well, you're going to succeed or you're going to be dead, one or the other. And so you have to have that philosophy, or
that's right.
You're not going to get there. So there's no shame. There's nothing wrong with this. This is just normal stuff in my world.
Yeah. I mean, look, it sucks for the investors that invested in them as VCs, whatever, but they're used to that. And the people that it sucks for the most are the people who were just the investors in each of the, each of the investment vehicles that the community built out, because that was no fault of the people making decisions about what to invest in. They just had a dependency there, and it was a combination of factors that, in this kind of a market, you can't,
Well, everybody's got dependencies too. Look, think about what would happen if, say, they went down or something, or like another. I mean, I was thinking about Celsius yesterday, and I was thinking, I like that they're in bankruptcy court to solve all this shit, rather than just vaporizing and disappearing and sorry it didn't work out kind of thing. I'm glad that a thing that's that big of it, like a giant play like that, is actually getting properly sorted. So I think that for those, everybody was chasing yield. I mean, we talked about it all the time too. I mean, I was jumping into crazy shit left and right. But, when you're running around and you've got like 20 million to invest and you see something at, 300% APY or whatever, you're going in your head, you're thinking, fuck, I'll make $40 million this year on this.
Right.
And, you're going for it, and everybody is going for it. Thanks, Sean, for that shout out. Appreciate it. But I just don't, I think you just got to go all out, I guess. And, and you do your best. Everybody picked these yields who was playing in this space. So this Ramon guy, I'd love to get him on this show so we could just have a PTSD debriefing with him.
He said he needs a month or so. He's, look, it's that whole post shutdown depression you're going to go through. Maybe he won't, but I don't know. It's like, it's just how it is. But in this thread,
constantly second guess,
in this thread, he does an awesome job of just being completely transparent, along with the blog post about the things that caused it. And it's good. It's he admits there are mistakes. He talks about market conditions, all that good stuff. So,
well, look, execution mistakes are just that, but they're decisions. And you talk to anybody that operates in high stress, life or death situations, all they say is make decisions. Don't sit there going, what should I do? Because you're dead. You make decision. If it's a wrong decision, then the next one might get you back onto the mean line, the right line, so to speak.
Yeah.
And you just got to keep going. So I love the fact that this guy's throwing it out like this.
I do too. And he's giving back to the community. The other interesting thing here is this. His platform was founded on the idea of medium to long-term investments, right? But because they only raised 3 million, they decided they had to go for more short-term higher gains. So we actually talked about this new pool that they launched, this ETH staking pool that they launched that was paying like 40% on staked ETH, but there were multiple tiers. You were borrowing from Rari, blah, blah, blah. That's one of the things that caused the downfall. Had they been able to raise enough money, they could have gotten into a let's reduce our burn mode and let's ride this out and continue to grow community and make it through, right? So that's something everyone needs to think about. Nobody wants to kind of reduce your valuation, et cetera, et cetera, et cetera. But if you've got money in the wallet or money, that you can get in, take that valuation hit so you can survive outwards if you think you have a long-term play. And that's a hard thing to swallow too if you're in that position.
Yeah, no, I remember a company in the DC area, .com days. Actually, a buddy of mine was their head of strategy, and I almost went to do some stuff with them, but never did. Right at the end of .com, they went out and did a secondary raise of $2 billion. And this is a company I think had less than 100 million in revenue. And, this high flying valuation, and maybe it was 1.2, 1.4 billion. I might be moving the numbers around a bit, but huge money. And that carried them. I don't know what they did after .com or where they went. It was a wireless play back when wireless was, cutting edge and, before smartphones and all this stuff. So, but they had that billion plus in cash. So they went out and did acquisitions when all these other companies hit the skids. They had enough money to pay themselves like a decade. So, there's a big, when the market's super, super frothy, and that big round of money comes in, where it's like, all right, we'll give you, pre-money 8 billion, we'll give you 2 billion, or we'll give you 2 billion pre-money 1 billion. You're like, I'm kind of just picking different scenarios. you can structure it at the shareholder agreement level and the board level if you have enough directors to where you still have control of everything.
Right.
But you also have $2 billion in cash.
Exactly.
So dilution is not a bad thing as long
Nope.
as you control it. So I love
Especially
these
if it
kinds
depends
of,
on your survival.
yeah, and then you get it done right before the market tanks. I
Yep.
mean, that's the beauty of it. So these, I think we used to call these, I've heard people call them real options in the sense of decision choices you have to make. And, when you can't control macro cycles and capital cycles and say frothiness or market interest, you can only execute and you can only communicate a competent message that you're doing, that you're executing. You're making a run at it. You're not doing stupid stuff. You're not going high risk. You're just executing, and that's all you can do. And the market does reward you for that.
Yep.
It doesn't reward crazy shit. I mean, TradeFi doesn't, but when the herd's up and the money's flowing into a sector, yeah, it rewards crazy shit. We just saw it.
Yep.
But to me, I think that you have to always be continuously evaluating that. How much capital do I have? What am I trying to do? How much is that going to cost? How much debt do I have? Do I need to pay that down? What are my clients? Who's the biggest one? Where are my dependencies? Blah, blah. It never ends.
Yep.
And that's why, like when I said the other day about, and it might have been perceived the wrong way, but I said that like with all these genius autists creating protocols, they got to surround themselves with all these types of people.
Yeah.
Because it keeps you sane. You don't have to think about everything. You don't have to worry about everything.
Yep.
The best thing you could ever do is hire people that you trust to completely execute on everything, and you don't even have to ask.
That makes sense.
And go from there. So, I mean, I think that that's where we're getting with a lot of this. And I love this whole generation of younger entrepreneurs like Ramon that, are doing it the right way.
Yep, absolutely. So before we get to some of the stuff you wanted to talk about today, can we talk about more leadership decisions?
Sure.
Remember us talking about Helium and how they had very little revenue and the people who bought all the nodes. This is that's the network that provides internet connectivity via nodes that people can get, and then they use tokens to get the connectivity. Well, all these people bought those nodes and they were disappointed because their revenue's not there yet. But of course, that's something that should take a lot more time to build up. How many users can you possibly have for this? But the concept is really cool. So this morning, I see this post. Helium will be moving to the Solana blockchain. Now, I don't know about you, but considering the fact that this is a network that should be pretty stable because you're going to have people counting on it for internet connectivity, I'm not sure that would have been my first choice of chains with their track record of late. Having to be rebooted multiple times over the last 9 months or so. I would have gone with like an app chain from Avalanche or Polygon or BNB chain or something else. Now they are trying to get away from, they had their own chain. And I think the goal is smart. Let's get out of managing a blockchain and let's get into, just doing what we should be doing, focused on what we're good at. That's great. But, you could have picked any other chain, or you could have done like Anchor offers a service where they will completely manage your app chain for you. Right. Mm-hmm. So you get this dedicated chain, dedicated fee structure, dedicated everything. So you get the performance, the stability, everything built in, and you don't have to manage the chain. Right. You've got a service like Anchor managing it for you, but you have all the performance and control that you want over how the network functions. But I don't know. I'm not a big fan of this choice.
I love that you find these things. I can't remember. I always had Helium and Celsius kind of lumped together, maybe just because they were,
totally different. Yeah.
Yeah. But I couldn't remember. Was Helium about, it was about like gas fee token, or what was
no, Helium
the connectivity?
Helium is creating a worldwide cellular network, Wi-Fi and cellular network. And the idea is that people can buy these hardware nodes and put them up, and then people that are members of Helium buy tokens, the Helium tokens, and use those tokens to access the cellular network.
Right. To access the network. Got it. Okay.
Right.
So and data network, or is it a call network, or is it both?
Call and data. And so the idea is that these people that own these nodes are going to make money from people using their connection. But the idea is further that you get these high-speed connections all over the world, and you pay a lot less for your internet and cellular access, right? Great concept, brilliant concept. They had this massive number of people buy these nodes, but they're all pissed off because nobody's using helium yet, which, that takes time, right? Now, part of their plan, the thing that they had the controversy about a few weeks ago was they were claiming all of these big enterprise relationships for cellular access, which they didn't have, right? There were a couple doing test deployments, but they didn't have it. So I don't know. I just, from my perspective, Solana wouldn't have been my first choice. Now, from what I understood of the thread, there are some technical reasons they may have chosen Solana for doing off-chain computing, but there are other options for off-chain compute along with on-chain data storage. So I wouldn't personally make a big infrastructure bet right now on the Solana blockchain. That's just me. So apologies to the Solana fans out there, but
I was just trying to grapple with this too, because I was thinking of another project that I was involved in that was it was these guys out of New York, but it was in Southeast Asia, and they were doing these kind of like charging stations. I can't remember, they must have been powered with solar or something, but so at the village level, like say, farming agrarian country, not in New York City, let's say.
Rural.
And so a farmer would, how in India, like the micropayment stuff and they would go to the village and one person would get a cell phone and get a contract with the phone company. And then this is years ago, this isn't today, maybe. And everyone would use the phone to make calls from the village, and then whoever ran it, usually a grandma or a mom, would get a cut of all the money going through. And then I think about the charging station, I started thinking that'd be kind of cool if all those charging stations became decentralized nodes that would handle Wi-Fi and data traffic on Helium. But that alone, what I'm thinking about with Solana is that's a super NFT heavy blockchain, right?
Well, they do a lot of NFT. It's high performance. There's a bunch of DeFi protocols on there too, but there is a lot of NFT activity.
Is there an angle then for, how BS or Binance Chain, Smart Chain, it's really out in a lot of these small rural markets
that's around a lot of users out there. Yeah,
I wonder if this takes Solana into, I don't know the cell tower distribution strategy or whatever for Helium or how they're doing it.
Well, they're not doing cell towers. It's all these nodes that just operate off of internet connectivity.
All server-based stuff So, it's almost like taking it down to decentralized nodes at like the smartphone level or the server level. Maybe that plays into Solana's strategy, or maybe Solana has enough product traffic in a way that makes sense for Helium, but there has to be something else in there strategically that
maybe it's a big ass grant because they haven't been generating
maybe there's money in tokens too. I mean, because it doesn't make sense long game for any of the chains to do something with Helium if you're really going full on decentralization everywhere. If that's your strategy.
I have a hard time with Helium making the choice on Solana with just its stability stuff. That's all. So
anyway, I agree 100%.
I think you wanted to bring up some stuff that you'd been looking at this morning. Is that still on your agenda for today?
I got one for you. Oops, I'm not going to be able to see it.
You want to share it?
Yeah, it's on Forbes. Hold on a second. Let me get this somewhere where I can see it.
Or do you want to send it to me and I'll put it up?
Yeah, let me do that. I'll put it in the channels. I'll just dump 3 links in here for you right now. Here's one. We're going to forward to DeFi lunch. Okay, here's one.
Got it.
And then there was a I thought you'd like that one, buddy.
You're fucking hilarious, dude. I love it.
So let's do these two first.
This one first? Okay.
Yeah.
Okay. So older entrepreneurs outperform younger founders, shattering ageism. Yes.
There was some really hold on, you got it up, right? Okay. There was some really
real quick. Sorry, wait, real quick before you start. Niblets on the last story said, sounds a bit like an old project called Right Mesh. a crypto-enabled network of meshed cell phones to distribute coverage targeting rural developing markets. Oh, that's cool. That was ahead of its time, because that's more relevant now. But yeah, that sounds a lot like what you were thinking of, Joe, too.
Yeah, and I remember hearing stuff about that, like, these mesh networks that evidently are undetectable. So the different like groups have been setting up like calls on mesh networks in the big cities too, and it's not going through any routers or anything. It's just sort of, no like phone company stuff. So it keeps it completely.
Oh, hey,
dark.
Sean wants you to take over being main host, I guess. So that's cool. I'm going to let you start handling all the administrative shit and news finding.
No, I just have to talk. Brad's the heavy lifter here.
Sean's stirring shit up, boy.
Yeah,
or maybe he
like
thinks Joe's the main host and he thinks I should become the main host. I don't know.
Well, it's just a talent thing. It's I like to look at myself as the talent, and Brad's like the boss. So I could be unpredictable. But this was a gift article for Brad that I wanted to put up. And what was really interesting is it talked about, yes, Niblets, it talked about how all these big founders out there, other than, the Zuckerberg and Bill Gates and, maybe the Google guys who were 25 and Zuckerberg and Gates were 2021. It lists all these other founders that are like 65, 37. Uh-huh. It seems like the sweet spot is around 43 is what I get out of this article.
Wow.
But, there's the young ones, keep going down. And what most of these have already been successful at a company and they go out and start their own. So here we go. The average age of founders of the rare ultra fast unicorn was 45. The mean age of high-tech startup founders is 43. The likely success of a founder increases up until the age of 60. So Brad, you better get going on that, man. I know you're going to blow through that 60 line. So
I got to catch up to you, Joe.
Exactly. A 50-year-old founder is twice as likely to build a thriving enterprise that has either an IPO or a successful acquisition as a 30-year-old founder. Twice as likely.
Yeah.
Okay. So look, because I kind of do this myself too. I kind of like to bet on the people versus the idea. Here's some great ones. Eric Yuan. Bernie Marcus founded Home Depot when he was 50. Bob Carson's GoDaddy 47. Reed Hastings, Netflix 37. Noyce, Intel 41. Geico at 50. Vera Wang, designer first dress at 40.
Wow.
But I remember something when I was a kid. Lucille Ball, complete failure in Hollywood until she was 40 plus.
It's amazing.
And so the thing is, again, like I said, you don't quit. They interviewed, I think it was Clooney or Pitt, one of those guys, because they, after college, all went out to Hollywood, like 5 or 6 of them, and they were said, why did you become a success and everybody else failed? They said, because he stayed. Everybody else went home.
He didn't give up.
Yeah. So, this is the point.
And I will tell you, there is a look, not just in tech, this kind of ageism. I see tweets all day long, like that are ageist. And, people somehow think that because people are older, they can't learn or adapt or build or grow something new. And it's just ludicrous. The best combination, as this article points out, is experience along with the new tech or the new ideas, right? Yeah. That's what, look, when you've been burned, hurt, screwed, failed, multiple times in your life, you get an instinct for shit that will and will not work. And you're going to fail again, but you at least have a better insight into what can work. That's an awesome article, Joe. Good find.
Yeah, no, it's, look, I think that this is an inflection point between like experience and, say, innate intelligence in my mind. So, and then intrinsic or sort of intrinsically motivated people, or say self-starter type people. I don't know. I never really thought about it, but I kind of get up every day and figure out what I'm going to do and go do it or try to. It's like I set my agenda. And I think that is something that young people can be really, really good at. But, the biggest challenge in human resources is how do you transfer the knowledge, say, from Brad, who's got 40 years, well, not 40, 30 years, 25,
not quite
30 years. Yeah, sorry. I'm just saying a lot of experience, a lot of meetings. what I find I could do, I could sit in a meeting with people, and it somewhat works on Zoom too. But I can tell exactly in that meeting who I would want to work with and who I wouldn't.
Oh,
And
yeah,
I can
absolutely.
tell who makes me nervous, who makes me looking for my wallet, making sure I'm leaving with my wallet and I get fleeced. I mean, you could feel it. And when you're 18, I don't think you could feel it the same way because you haven't been lied to as much.
Yeah.
You haven't been deceived. You haven't been, hey, trust me, man. Hey, this business only works on trust.
Exactly.
So if you don't trust me, we can't do work. Oh, okay.
All the standard.
Hey, we don't negotiate term sheets. We're blah, 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 XYZ. And we throw term sheets out and we put the valuation. That's what it is. If you're going to negotiate it, that's not who we want. I mean, which is exactly the opposite of what you want. You want some person who's going to negotiate with you, because then he's not going to lose your money out there by doing something stupid. So,
good stuff.
This is stuff that, just tap into it. And then, of course, we need the young guys and gals, because I can't do 120 hours a week anymore, 80 hours. I'm lucky if I put in a hard 40, man. So it's like,
we know.
Yeah.
All right, so this Goldman Sachs tweet.
Yeah, it just came across it randomly. How we're always talking about recession this, recession that, and they put odds at it at 33% mild, and it would be a mild recession in the next year in 2023. So we're talking basically 5 quarters worth, 5.5 quarters ish. So but then you look at what happens. Another good thing to remember too is that in these you look at that inflation or the unemployment spike for the pandemic, man.
Yeah.
It's that when interest rates start going up like this, that's usually when the market is really outperforms.
Right.
So I don't think, you see the stock market, it kind of goes down and then it goes up and it stays stable and whatever. The reason it does that is because usually the Fed's playing catch up, and trying to just think back. .com is a great example.
It's always using trailing data.
Yeah, and it's coming in, all of a sudden the shit's not stopping. So then it comes in with the massive hike that just stops everybody in their tracks.
Yep.
And because the market's still screaming, then the market sells off, then the unemployment comes and blah, 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 blah. But that's if it's really bad. So to me, I think this is good news too. And it has all that. If you could scroll down a tiny bit just to show that chart, please.
Yep.
This goes back, I think, to the 1950. And so you see all the unemployment rates, and then the gray bands in there, vertical bars, are the recessions. And so the width is the duration, and you see some are milder and some are stronger. I mean, I didn't even really notice that. I guess the pandemic was a recession. It was like a 47% contraction, but I think Q3 had 38% growth or something like that. So, but it's just good to look at this and understand what's going on. Look at all the recessions.
Yeah, this is actually pretty interesting. This one in the 70s is pretty interesting because everybody talks about the massive increase in rates that caused this horrible, painful recession. But interestingly enough, the employment rates were climbing through it on all of these.
Yeah, well, this one, where you're pointing out, this looks like a 74-ish.
Yeah,
that was the OPEC boycott, 73, the oil crisis in the U.S., which brought gas up from 50 cents a gallon to $1 or something, and everybody was flipping out. So in the 70s, you did get those cycles. And then you see in 1980, that's when Volcker, because there was stagflation going on.
That was Volcker's? Yeah.
Volcker came in and cranked up interest rates to 20%, I think. And he stopped because there was stagflation. So that's where you have inflation and recession basically at the same time. And that's what you don't want, because that gets that wage price spiral thing going. So he came in and just stopped the economy in its tracks. And so where you see those 10% unemployment numbers, right, that beginning of that recession, I think you were looking at stuff in the 18 to 20%.
Yeah.
Your main rate.
Yeah.
So it's just good, when you hear all the jargon and what it is and what we're doing, pull up something like this and, take a look and just understand that this shit's a regular thing. It's sort of like anytime you grow, let's say you had a company in New York and you went and opened offices in 3 or 4 cities. Maybe it was like, I don't know, Seattle, St. Louis, and Miami. And then capital gets more expensive, business isn't panning out, and you consolidate and you close one of them.
Right.
Maybe you close St. Louis. I'm just picking one. But you close that and you focus on the other 2 and you keep the other people remote. That's a economic contraction event. Laying people off is an economic contraction event. Closing companies, not starting new business lines. Those are all economic contraction activities, but it's all consolidating. Yep. So, that's what we do. We grow, and then we chop off the diseased parts and we reconsolidate. Think about like an amoeba where it grows out in like 5 or 6 different directions. And then it tends to sort of fill in the gaps between those sort of growth areas and then shortens the length of the whatever thing is. You build, so you get a bigger, solid central core. And then you grow out from there again. So, it just can't be up only. That's all I'm saying. So when you hear recession, it doesn't mean really a big bad thing. If you just got a job and you're in a company that maybe the revenue's tacking off in, then you might, then it might be a bigger thing because you might get let go. But, in this job market, from what I'm seeing, I mean, still there's opportunity out there. People are still getting hired. And, I remember where I waited tables and did shit in high school for work, and I think I was getting paid $1.70 an hour was minimum wage. I think waiters now are getting like $15. So
I don't know what the tipped minimum is right now. Yeah, I don't know.
But this is a great. We should share that link because it's a great article to read. Just
I will. Definitely will. That's cool. Awesome.
No, I don't know, Niblets. I want to talk about this unless the Fed keeps feeding the zombies. Now, I was thinking about this a lot too, and so there was the conversation, there was the Jackson Hole conference, and there was we're going after inflation. I mean, I don't see how people think that they're not going after inflation, but then they make a damn it, we're going to really do it, and the market sells off 5% for a couple of days, and then I think it's rebounded a little bit, but there's just no way that it's sustainable without pairing the Fed balance sheet and getting these interest rates back up to normalcy. So I think that I think you do most of the hard work in the balance sheet area, and as those securities or whatever roll off every quarter, it does take money out of the banking system, so it does create a better effect, I think. So I think what you're going to see in the September meeting, and also we got the midterm elections coming up, so nobody wants to do anything between now and then.
Exactly.
To change performance and look political. So
it's interesting. I was watching a video with Charlie Munger yesterday talking about recession, inflation, printing money, et cetera, et cetera, et cetera. And he said, he doesn't think that a Volcker could ever do what he did then again, because the politicians would never allow it. That making those hard calls now is, impossible.
Yeah. So I think to that point too, that's what I think was going to happen is when you see September, I think the market's expecting 50 to 75. I expect it to come in at 50 bips. Okay. Not the high end, because two things of thought here. We got an election in 2 months, and you want to make this is your last chance to do anything until after the election.
Yep.
So you either come in strong and go for your 75, but risk creating some economic contagion or confusion or something, or you come in at 50 and say, and then the market goes, oh, holy shit. All right, only 50. Let's just go all in again. I'll go FOMOing in. It keeps everything stable. And then after the election, you come in, if you still need to work on your interest rate numbers, you come in and do a full 75 to 1 point hike.
Yeah.
And then you got 2 years to clamp this thing down, get it under control, have a little recession, whatever, in 2023. And then everything should kind of come back in line to where you have a decent economy running into the general election.
Makes sense.
I think that's the strategy. Whether, nobody's coordinating this. I'm not saying there's a coordinated strategy because the Fed's independent, but they do what they think is best. for
Sure.
the country. And they try to stay apolitical. I think Powell's actually a Republican, to be honest. But they don't. These are professionals. So that's kind of my call. It's going to be something like that. And then you'll see that Fed balance sheet. It's at 9 trillion. Start tacking. I think it's below 9 now. Start tacking down over time. I think I saw some data where they're almost up to 95 billion a month coming off of that balance sheet. So that's supposed to come in September. So they're trying to do $1 trillion a year off the balance sheet. So that's a big number. I mean, it's not that big, but in say it's 90s big.
It used to be big. Yeah, I was about to say that used to be a big number.
So that's kind of what I think's happening. And I think with the dollar staying strong because of the interest rate hikes, foreign capital flowing in, goes into stock markets or held in dollars, whatever, that holds the market up from really, being the first thing everybody sells, which is good to me for crypto, because then it gets people kind of, thinking about more about the next cycle. People who maybe were in it but aren't in it right now, they start thinking about the next cycle. They got a little money to play with. So I think, again, this is why I feel optimistic. Now, again, I'm not sitting there in the middle of Europe with Nord Stream 1 getting cut off, and I'm not sitting in Ukraine with a war being fought, and I'm not dealing with all those things, and I'm not dealing with what the fuck are they doing with the dollar. It's fucking all of our currencies. I'm not looking at it from that perspective either. But
right,
I think if it's kind of like the U.S. dollar or USA has to have like that BTC blow off top, basically. Yeah. And then cascades down through everyone. I mean, it's a silly analogy, but it seems partially accurate. So, I mean, that's just sort of my general feeling about everything.
Love it. All right. So, Dapper Labs Flow blockchain is going to help Ticketmaster screw people over and remain the middleman for the NFT ticket model. So that's a great move on a centralized blockchain. Let's make sure Ticketmaster can keep charging $30 per ticket for convenience fees. And we'll just make it easier.
Always around. I remember when buddy of mine, there was E2E.net was a big .com play, venture money. It had like the guys from AOL in it. I think Ted Leonis was in it, who now owns the Capitals, and maybe he's buying the Wizards or something. And I don't know if Steve Case was in there, but Ted Leonis was in there, Ledecky and all those guys. And some of the people came from Ticketmaster, or Ticketmaster was involved in a lot of .com stuff early on.
Yeah.
And I think it's interesting to see them so into this part too.
Well, here's the thing I don't understand is, or maybe it's happening and we just haven't heard about it yet. This is a beautiful opportunity for all of the bands, to get together, form a fucking DAO, launch a platform for ticketing so that all the major acts, all of the pop stars, everything circumvent Ticketmaster and stop charging huge fees to people trying to go see a concert and the tickets are already ridiculously priced, and take the middleman out. Right. I mean, and they all say they want to do that. Well, here's a tech for you to do it. Right. You can create a marketplace. People can resell the tickets. I mean, it's a big tech play. I get it. There's a lot of work that has to be done, but I mean, this is just another one of those examples of it's like XRP jumping in bed with Western Union, and now Dapper Labs Flow jumping in bed with Ticketmaster. Let's keep the middleman afloat that's screwing over the little guy, right? That's what this deal is. So, not going to be considering Dapper Labs Flow blockchain for anything anytime soon. So
yeah, I mean, look, this is an issue that I didn't really think a lot about, but until the Doki Doki experience. And what I saw was happening to artists out there that are, all they get is commissions and, to create art for the corporates. And it's like $50 and that's all they get. They have no control over their destiny. And when they could start like taking their art and putting it into NFTs and cut that middleman out, and then the money came straight to them, I thought that was brilliant, because that's what we're all about. I see the same thing here, like you said. Why aren't the, and I guess it's probably because of the agencies and all of that involved and the labels and, they want it this way. But I know I heard about some artists that were doing stuff just direct. Some bands.
Well, I mean, the Grateful Dead have been doing it for ages, and that's right, and a bunch of other bands, But so why not bring them all together? Get the comedians, get the bands, get anybody that sells a ticket, right? Get the theaters, the Broadway theaters, get them all together and create a decentralized Ticketmaster competitor, right? Cut out the middleman, have it be some nominal fee that pays for the system and the people that administer it, and make it less expensive so more people can go to your concerts,
Well, what if you get something like StubHub?
Cut out the rent singers.
Yeah, I'm thinking about like a StubHub where you go buy your tickets to the concerts and then you can resell them, and because that's peer to peer.
Right. But StubHub is let me tell you, don't get me started on what a colossal operating clusterfuck that place is.
They've actually always been good to me, but yeah, I know they take a big rake too. Yeah.
Well, no, not just the rake. It's just they're horribly run. I'm not going to get into the details, but my wife sold some tickets and went through a nightmare with that group. She still hasn't gotten her money. It's been 3 years.
Hey, I'll tell you a quick story just to go against that. I was at the Miami Open tennis tournament with my daughter. I bought some tickets on StubHub, came in. They wouldn't go through I did this a lot, so this was the one time this happened. They wouldn't go through the turnstile because somebody either used them or somebody else had another copy. I couldn't get in. Well, make a long story short, I got in anyhow, but I called StubHub and told them, and I said I bought some other tickets, or somebody else gave me tickets and I got in anyhow. And they were like, okay, just send us a picture of the other tickets you bought and we'll refund you all your money. And I was like, no bucks. I took a picture, sent it, and they put the money back in. So I found they were responsive that experience. Way. But yeah, I know it needs to be done better.
Again,
but something like that
on the chain and it was NFTs, right? And it was a digital thing that you held up at the gate, then you would have never had that problem, and they wouldn't have had to give anybody money back. So anyway, good. I just think there's an opportunity there.
Oh no, there is. You're right. Absolutely.
We're running out of time here. So there's a bit of a discussion going on because there's a bug in Compound's some latest upgrade to the protocol, and it froze all of the ETH in one of the let me see what it was, CETH are held up. So it's causing all kinds of problems. And the problem is they have a 7-day lock for changes. So there's a lot of discussion going on in the DeFi world about how 7 days is too long. Maybe it should be 24 hours. Maybe it should be 48 hours, et cetera. But we'll see where this shakes out. But
is that their time lock on code changes?
Time lock, yeah.
Oh, okay.
It's a 7-day time lock. So, yeah, we don't need to get into that.
Is that, I know you've talked about this before. Is that the standard across the industry, a 7-day time lock, or do projects just
No. Often it's 24 hours or 36 hours or 48 hours. That's normally, I think, the standard. So it's unusual. They're trying to be very conservative to give community time to vote and blah, 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 blah. But it also means now people are locked out of their money, right? So it's painful. Hey, this is a new one. I'm going to look more into this project called HouseCat, follow trading, people building indexes, et cetera, supposedly truly decentralized. Haven't had a chance to look at it in real depth yet, but the house indexes are all failing, and the outside traders who are providing their strategies are doing really well. So that's not what I want to do. That's not a good one. We won't worry about that. I don't think we have anything else. We may have hit the bottom because Kramer says avoid all speculative investments like crypto. So maybe we have hit the bottom.
Hey, I found a report on NFTs and financial crime, a good 100-page from Elliptic NFT, just great content. And it's worth everybody to read it. How do I paste that into this comments? Do you know? Or do I?
You'd have to paste the link to it, but make sure you send me the link so I can put it in the show notes.
Okay, I'm going to try to paste this link right here. If anybody wants to grab it, it should pull that one up, and I'll put it in the Telegram channel too. So
yeah, remember how we were talking about that miner that's going to go ahead and do the ETH proof of work fork? Well, look, Ethermine, smart people, I guess they planned ahead for the switch to staking. They're launching a staking service. Who would have thought? Wow. What a brilliant fucking idea. Networks move into proof of stake. You have all these people who are mining ETH. Maybe they'd like to stake their ETH and earn interest on their ETH.
Go figure.
So, yeah, what a shock. Somebody actually,
But not in the U.S. Yeah.
Somebody with the soul. Yeah,
you see that?
Yeah, they are also the mining operation that blacklisted the Tornado Cash list. So,
do you have the KYC to go into that mining operation, or do you just wallet?
I don't know.
Because I would wonder, look, if it says no US, then obviously you strap on your VPN for that one.
Yeah, I don't know if they KYC or not. Huh. Of course, there's always a risk that they lock up your funds. Yeah. So. Galaxy and Genesis are launching a big fund called Cryptos, KRYPTOS, 500 million fund of their own. So I guess it's all their money.
Okay, wait. So we got Reddit co-founder, Galaxy Digital and Genesis raising. Oh, nice.
Oh no, these two funds. 776 is the 177.6 million fund, which is Alexis Ohanian's venture capital fund. He's done this before, and then Galaxy Digital and Genesis are raising their own fund for 500 million.
I like that 1776 playing on the revolution.
Maybe.
No, because look, 177.6 is the amount raised.
Cute. Yeah, that's cute. That's cute.
And then the fund is 776. Yeah,
that's very cute. Yeah, and then never noticed that. That's very astute of you, Joe. It's very astute. Japan regulator has proposed tax breaks for investors and crypto investors, trying to increase economic capabilities in Japan, which is a good sign because they've been very strict. So,
yeah, you want to talk about traditional and conservative society? I mean, they move pretty slow.
Yeah, so hopefully
Godzilla movies.
Yeah,
or
hopefully.
Ultraman. What was the Ultraman pose? Was it this or how? What would he do with his arms? I can't remember. Was it?
I have no fucking clue.
I didn't get it as a kid and going, this is so fucking stupid. When I was like,
I didn't truly get into superheroes until my 50s with my son.
Really?
Yeah. Now I am.
So that's what we're calling Sports Illustrated bikini models these days, superheroes.
That's it. Oh, my superhero was Farrah Fawcett.
Oh, I had a poster of her, man.
Of course, everybody had the poster, the Nip poster.
Yeah.
Yeah, the Nip.
I remember having it on the wall when my cousin was in town. We were just talking about this this summer. And we're like, boys, I think we must have been 8th graders or something. And we're looking at the poster and my cousin just sits there, he starts going, I wanna have Farrah, but he's showing his finger instead of the bird instead of saying it. And I look out of the corner of my eye and I could see my mom standing in the doorway. Because I was so pissed at this guy. I was like, what'd you say? I want to fuck Farrah.
Oh, no, you got it busted.
And then his mom comes in too and catches him because he was the perfect angel kid,
yeah, this is the poster.
Yeah, there you go.
Selling for $13 on eBay.
Yeah, man, she was and what was it? Charlie's Angels. That's right. Her and
Charlie's Angels.
Carol Ladd, Kate Jackson, Jacqueline Smith. Yeah,
Jacqueline Smith. Yeah.
That nipple was quite a risque.
Yeah, that was controversial because that was 70. What year was that?
It's 78, 76, something like that.
Something like that. Yeah. It was prime teen years for me.
Yeah. No, and all the girls had hair like that back then.
Yep.
Remember, everybody had the Farrah haircut.
Yep, exactly.
Throwing that on a bowl. Never mind. I'm not at a happy hour in 1987, so it's like.
Thank you, everybody, for listening. Thank you, Niblets and Sean, for participating today. Love you and appreciate you. Please, if you get a chance, rate and review us on Apple Podcasts. Don't hesitate to reach out with any ideas, thoughts, guest ideas, critiques, comments, feedback. B05 Crypto on Twitter and Telegram. B05 Crypto #2143 on Discord. You can listen to past episodes and the Mission DeFi show on missiondefi.com.
Yeah.
That's all I got, Joe.
Yeah. Another thing, I realized that, on Telegram, I'm Pathfinder, but I realized that people can't find me, which is that. So it's go with the @Pathfinder305 and you'll get me on Telegram.
Yeah, Joe is @Pathfinder305, @Pathfinder305 on Telegram if you want to chat with him. He has a Discord, but he doesn't use it. So.
And LinkedIn is, if any of you you know, so I know it's kind of like the typewriter these days, LinkedIn, but
Yeah.
I'm over there active again. And that's just Joe Cawley, Joecawley. So you can find me there on LinkedIn. I'm starting to kind of share more stuff about the show there, and kind of trying to start to I'm not jumping back into Twitter yet, but trying to make it easy for Brad.
Joe's going to start his own executive coaching and yoga business.
No, I'm going to grow your followers, bitch. That's what it's No, that's all they do, man. It's growing followers and tell you how to be successful. I got one today about franchising. They want to
me too. I've gotten 3 duplicate messages of, we're going to help you start your Niblets. Does Joe have an AOL address? He might as well.
No, I don't. I never had an AOL address.
He's got an AOL and an Earthlink.
Yeah, no, I was Mindspring. That was before Earthlink.
Yeah.
Mindspring was one of the original ones with Earthlink.
And forth on her AOL account.
Yeah, no, I mean, just people who started on AOL that are in retired years, they still use it.
Yeah.
But it does
that's all she has.
Yeah, and you go to their email box and you look at the inbox, it's like 85 million spam messages. It's just AOL is just a cesspool right now, all over it. It's just crap. You can't even get through it. My dad keeps deleting it because he's like, I can't find anything, you know. And
That's
I'm
hilarious.
like, well, you don't delete it, buddy. Let me help you out, put you on Gmail. So
exactly.
But it's funny. But look, it is that. This is what we do. And so, Niblets, I think, I don't know how old you are, but I'm guessing under 40 maybe. And take what we say, whatever you like, don't like, and use it to your advantage. The lessons that we've learned and the lessons that we've endured. So but the party never ends. The game never ends. The fight never ends. You just keep getting up, keep going until you don't. So, I kind of one of these guys who believes that you really can't, that you just got to make decisions and do shit and let's go. So on that note, what is it? It's today, this is Wednesday, so we're not really quite to the weekend yet. It's all right.
You're going to tell us all to have a great weekend. Joe's done. Joe's like, get me the fuck out of here.
It's Labor Day weekend going up, man. No, but yeah, you guys, it's always fun doing this, and feel free to reach out to me. And I can help. I do financial modeling, deck analysis. I also do second opinions on deals. So we have a lot of people on the show that do these big VC rounds and raise money. When people are throwing those term sheets out at you, if you want someone who has no conflict with anybody in your network, just to look at you and tell you where you negotiate at that point, what you talk about, I'm happy to do that. For a small fixed fee. But diminuous.
Small is relative.
Well, I mean, look, you're going to get all the money, right? So I'm going to help be the stealth guy behind the scenes, helping you control your.
Absolutely would recommend, if you're doing your financials planning, you need to do cash flow. You need to negotiate on the terms of a deal. I can't recommend Joe more highly to everyone. Absolutely he's been there and done it all. That's why you hire the old guys, because they know what they're doing. So, and
I'll still go out and drink with you, but
that's it. He'll definitely do that.
I'll keep myself to 2 though.
They're buying though.
Yeah, they buy, of course, but I don't do more than 2 anymore. I just don't.
Yeah.
It's not worth it.
Yeah.
But anyhow, let's all go make a bunch of money and have some fun, right?
Say bye, Joe.
Bye, everyone. Bye, Joe.